All right, so as I was saying that, even though the structure will be bearish, I don't really want to like take that trade on Monday. Except maybe it's going to be like, I don't know how to put it, a reversal. Let me say this. So let me give you guys a very clean example. So let's say the price has been buying like this now. We broke structure to the upside. We do something like this now, and we broke structure to the upside. So let's see a reversal. So my expectation now is to what? Three things: to sweep up, to take out liquidity in form of internal premium or discount pricing, or to fill gaps. So let's assume that there is a fair value gap around here that price needs to fill, and then this becomes the internal range liquidity. And then if price start reversing, so if I start seeing something like this now, for instance, if I start seeing something like this, break inducement, we had the first stop, then we now do something like this. Now, this is a very good example. So we broke structure, we swept liquidity, and we broke structure again. So I'm going to be having a range, like my current range. Where is going to be my current range? Is going to be this low to this side first. So I'll make sure that I'm selling for the premium, because now my expectation is for price to sell towards to fill gap first, and eventually price take out this low, good and fine. And once that low is taken, then this is going to be the range I'll be using from year to year. So I will now look for a way to look for confirmation entering inside of here to buy. Now in this kind of case now, this kind of sell, if this kind of structure happen maybe from lower time frame, I can take this sell on Monday, because my expectation is for price to sell down. My expectation is for price to sell down, and then do some one or two things before they are now going to buy and then break structure. So the whole sell should happen maybe between Monday to Tuesday. The price should get here by Wednesday, and with them, this kind of thing can only happen on a very volatile pair. Unlike, if it's Euro USD, all of these things can drag for like 2-3 weeks. I'm not even kidding, except maybe there is news. But like a very volatile pair like gold, US 13, that's 100, what else? All these SerVAR, or those US oil, all those are very volatile pairs. So this is what I'm trying to say. Then I can take this sell on Monday. This thing is let me show you an example on this US 30. So I was let me show an example of US 30. So this is what I'm trying to say. Look at this sell from here. Very good. Look at this sell. It happened on Monday, right? So we had a sweep. Now the objective of the sell is to come down to take out internal range liquidity, which is this low. Now, why am I targeting this low? I'm targeting that low because this low here, it is a weak low. This low did not break structure. This low only swept this high. This high printed this low. This low printed this high in form of what? Liquidity run, not a break of structure. So, we retested it, and then the sell happened New York on Monday. I think I posted this sell. It was very logical. It actually did make sense why the sell happened. So I was expecting price to sell to take out this low as I knew this. But now this low here, the swap liquidity, we broke structure to the upside. So now that low has been taken, we have a range from here to here. Now that this low has been taken, so price came there when on Tuesday. Then we bought on Tuesday. Like, it did make sense Wednesday, and that was why I was very confident to take the buy the second time on Wednesday. I posted about this, but price came back here. After, you can see, look at the move. This is one very funny thing about this pair. Look at the move. Like, I was expecting that, okay, we just take at the eye. So I just broke even. Like, I didn't really like mind. My expectation is that, okay, the next candlestick will just come and then take out this eye. That was my expectation. But you can see I will just reverse back, tap back into it. And then, so I was like, the expectation was clear. You can see we had this on Tuesday, then we had this on Wednesday. Then the sell on Monday was logical. So this Monday high here was eventually taken out at the end of the day. The high was taken out. Yeah, the high was taken out, but not really like well like that. Because when I look at this whole thing, price later joined all of this thing as a zone of resistance. And this is what I'm trying to say now. That is why I do not even mind to engage in this sell the third time. Because now we had the first touch, we had the second, we had the third, the fourth, and this is going to be the fifth. So I didn't really mind to engage in it. So instead of that, I would have mind to engage this, but I was not available that Friday. Now, this is what I used to, when I was teaching liquidity, this is what I'm saying, that instead of you taking the sell from that support of that resistance zone, then instead of that, wait for price to respect it the way they are selling. Anybody selling from here, good and fine. I am not interested in that. I don't want to sell from that. I don't trade like this. Instead of that, I will trade like this, right? Something, instead of that, I'm going to do this. We tap back into the premium and we sell. So this is more logical for me to sell from. It is more logical for me to sell from here than for me to sell from here. If I sell from here, I'm contributing to the trend line liquidity. And then you can see this, another one here. This happened on Monday. So now look at it here. We had Monday high and then this low around the end, price is not really close well on Monday. Monday low was just around there, but eventually we took it out. And then yesterday was Tuesday, so price took out London high before we sold down. Now I'm not really going to talk about it because we are still in this week, so we are not done with the week. We still have tomorrow, Thursday. So let's see what tomorrow is before I will know what next to do. I mean, till tomorrow. But now let me go back to other example. Now this here is my market structure. My market structure is very important. Like I said, that this thing is something that you just like. It is more like you putting it together, like additional confluence, right? Now, okay, I was using Euro USD. Sorry, let's continue with the Euro USD. I just pray that the network allow, like, I don't like this pricing. Let's try to do it. I seriously don't like it. Okay, I was somewhere around here. Now, let's continue. So we continue the push to the upside. We continue buying. Monday, Tuesday, we continue buying. Now, there is nothing ahead. So I said, then I will have waited for price to break structure to the downside for me to sell. So this low here, I know that if price come and break it, is it a break of structure? Absolutely no. These are internal range liquidity of that leg. So this is another internal range liquidity. So this is a low, right? There is no high here. The only time we have a high is what? Is until we take out one internal range liquidity. That is when we have a high. I've explained this thing over and over again. We have a low. The low has taken out internal range liquidity. It has broken structure. The high must at least take out internal range liquidity too as well before we can have a range. Now, we don't have our price continue buying to the upside. Those are too fast. I don't like. Now, let's go to lower time frame. I prefer to use like 30 minutes. So we don't have anything yet. Now, we continue pushing to the upside. Now, what day was this? Let's look at the day. This happened on Wednesday during the Asian session. Wednesday, 1 a.m. Asian session. So what will you be expecting? Asian session and liquidity, as you all know. Asian high, Asian low, they are liquidity. So instead of that, I won't be, no, the market structure here is still very much bullish. I don't see any reason to sell yet. So instead of that, I want to buy. So where is our range now? What range will you be using? This low here is going to be your range high. This one is going to be your range low. Why? Because this low swept liquidity, broke structure. This high, the same thing. You just want to see it break structure. So let it break this low there. Once it breaks that low, we are going to consider it as a range. right? Now we broke the low. So it is a range, we tap into the premium, and then we started buying to the upside. Now, price came there Wednesday, 1:45 p.m. Right? Because if I'm to use now, this is because I'm using 45. If I'm to go to like 1 hour, you see that price came there 2 p.m. New York open. That was when this manipulation happened. You can see how we just tap into the premium, we manipulated it. If this is US 30, since I've been trading US 30, you might have seen me doing something like this. Yeah, it is very possible because out of that time, I am expecting more push to the upside. I'm not selling. We are still very much bullish, not bearish. But now, this low was printed on Wednesday. We continue buying. There is higher probability that this low is going to be the low of the week. Why? Because we are on Wednesday now. It's remaining Thursday and Friday. Just 2 days. Now, those 2 days might just be ranging within what has happened. So this one here was printed. Where is our Monday? This is Monday. Now, this is Tuesday. Look at it. This is Wednesday. What will happen? And all of this, what Monday, Tuesday, Wednesday, aside from the day, all of them are still internal range liquidity. They are internal range liquidity. So this high was printed Wednesday, 7 p.m. in the evening, right? We are still not yet bearish. If there is a manipulation, let me see. Now, what time was this? What day was this? Thursday. Now, in this kind of scenario, I want you to watch it very well. In this kind of price action, Thursday, like after Thursday, we have Friday. So the week is almost done. So that means that high that was printed on Monday, that high that was printed on Wednesday, 7 p.m. will likely be the high of the week. I don't know, maybe you are understanding me, because at the end of the day, Monday low, Tuesday low, and Wednesday low, all of them are liquidity. They have not been taken, right? All these ones, they are liquidity and they have not been taken. So this is how you want to always see price. Now, this is going to be like more of in form of, what is it called? Back testing. Please, I see my screen. If you are seeing my screen, just put it on the chat.
No.
Oh, no, we can't see your screen.
We can't see your screen.
No? Okay.
No.
I'm coming. Let me reconnect back.
All right.
What about now?
No, not yet.
I guess
Yes.
I connected back my trading view. That's why
It's
It's
showing
working
up.
now.
I had to use another one.
It's working now.
All right, so let's continue. Now, it's this kind of price action now. You don't. This is what I used to say now, that in this kind of thing now, I don't need to wait for break. I don't need to wait for break of structure to the downside for me to know that there is higher probability for price to sell. At least to take out one of the low. At least to take out just one of that low before we continue to the upside. So we need a pullback. In this kind of case now, we need a pullback. We need a pullback, like a pullback to take out one of these low. So let's see if I see a way to sell, then I will sell. All right, is it that price takes out? Okay, price takes it out, but not really that clear like that. Just a little bit, like price took it out a little bit. So in this kind of case now, this could be an inducement into a zone. Now, this is going to be the range. This is going to be the range you'll be using. This last low that swept liquidity below structure with this last high that swept liquidity growth structure. So this could be an inducement into here, but in this kind of thing now, I don't really like taking this kind of trade. So eventually, price still came there in the afternoon on Thursday. So if price started buying from here, there is a probability for price to buy. From what I'm seeing now, yeah, price eventually might buy from here, and eventually if we buy, we are going for the external high. So meaning that this low will now become the low of the week. Wednesday low was manipulated, so this will now become the confirmed low of the week. And if price come and take out this high still on Wednesday, so meaning that Friday will trade back inside of here. Now, it is not every week that this usually happens. Let us continue for the new week. So in this week now, it is not really what I want to see. What I always want to see is that I always want to see Monday print a high, Tuesday manipulate it, Wednesday continue the manipulation, Thursday print the low, and Friday trade within the range. You'll be like, is this even possible? It is what, if like Monday is going to like range, Tuesday we manipulate it, Wednesday we continue, Thursday we print the low, and Friday we trade within the range of Tuesday high and Thursday low. This is where I want to get my entry, which is on Wednesday, or I get my entry here, which is on Thursday. But you say Monday is out of the picture and Friday range, not my business. Now, this Wednesday and Thursday, these 2 days is when I want to get into, because that is where price is going to form the high and low of the week. So eventually we took it out on Friday. This one, the week is already done. Like we are done for the week already. But the structure here is still very much bearish. There is no, it's still very much bullish, sorry. There is no bearish confirmation. There is no bearish confirmation yet. Now, let me move to the next thing. Let me move to the next one. Let's continue. So this is another new week where we have this on Monday around 2 a.m. during the Asia. Now, on the norms, my expectation will be like, I want to see price take out Monday high before I sell. At least, even though I want to sell, because now this is no longer a break of structure now. The reason why I'm going to say that this is a liquidity run. From what I've explained, immediately this high was taken, we had a reversal, not a break of structure yet. So I would personally like to see price take out that Monday high before we continue the sell to the downside. Now, the only time price will not take it out, maybe we expect price not to take it out, is that maybe price is going to save now. Price might save the liquidity for later. One thing I'm trying to say is that either price is coming, either price is interested in coming to clear this low first before going for the high. So we have a sell side and we have a buy side. So price might sell to take this out first and come for this, something like that. You understand what I'm trying to say? So now, yeah, we had this internal break of structure, and then all of this, I don't really consider all of this as a structure, but in case there is a sell, no problem. Okay, what day is this? Tuesday. Now, Tuesday, 6 p.m. Tuesday, 7 p.m. In the evening, this is already late in the evening. Now, we started selling on Wednesday, Asian. We started selling on Wednesday, Asian. We started selling on Wednesday, Asian. Okay, just like I said, we might be coming to take out this low first. We might be coming to take out that low, so price is going to take out the low. Now, look at it here. We have not taken out this low yet. You know, from my explanation now, how many liquidity do we have in this particular structure? Look at this structure. Let me even remove these 2 lines here. Let's assume that this is what you are seeing. How will you mark out this kind of structure? Let me clear everything. How will you mark out this kind of structure? In this kind of structure, this is a break of structure. Good and fine. Like I said, this becomes the liquidity run, not a break of structure. This is an internal range liquidity. This is an internal range liquidity. This is an internal range liquidity. I don't need to mark them out. I just know this. But in this kind of scenario now, you can see this is more like a zone of support. Now, I'm going to expect price to take it out, definitely. Now, look at the current price action that is happening here. I want you to look at everything here. For every break of structure, what happened? For every break of structure, liquidity is taken. I have said it before. You need to understand that there are a set of people trying to take a sell from here. Yeah, there are people selling from here. This supply failed, and then it is what took it out? A demand. A demand took it out. Now, you can see when price get there, price was trying to like retest it. Price was trying to buy from there. You can see we had a reaction from there, and eventually we broke the low. Let's wait. Now, we break it. This is the break of structure. You see this particular place here, you can see when they were trying to buy, they had the first push to the upside, they pushed, but this push here did not break this high. We didn't break structure. Instead of that, we only came to sweep liquidity and we started selling, so we broke below the low. So that's area there. You want to look for a POI to continue the sell for price to come and take out internal range liquidity. Are you getting me? You want to look for a POI to continue the sell for price to come and take out the internal range liquidity. Look at it here. This is what I talked about, order block. My black candlestick is my bearish candlestick. The red one is the bullish. We had this 1, 2, 3, 4, 5 bearish candlestick. Then we have 2 bullish candlestick as a pullback. Then we continue selling to the downside. You can see how price painted this side more like an inducement. You see this bullish one, which is the order block. That is the last buy candlestick. I gave a definition of another block. The last buy candlestick before this downward move that broke the structure. So in this kind of case now, in this kind of scenario now, I want to take the sell. And my first objective, like I said, the first objective is for price to take out this low. Now, I am taking the sell not because of break of structure. The number one reason for this sell is for price to fulfill this objective of clearing this low, of clearing this liquidity at a support, right? So I will want to like wait for price to retest this place. And you can see why I chose that place. What are the things that connect these together? I used to, when I was teaching PO, I said, look for connection. Nothing is random. And when it comes to chart, nothing is like, it did not just come from somewhere. These things are connected together. For every supply that failed, a demand led to, like it was a demand that caused it. For every demand that failed, for every support that got broken, it become resistant. Like all of these things, like they have this connection. So this is how I pick this now. A supply from here, it became a demand. Price tried to push from there. And then we had a break of structure from there. Around that area, I have a very clean order block. Now, time, days, I want this to be, what day is this? I didn't even follow it up. Okay, Wednesday, very good. This is going to be on Thursday, London. Abi? Yeah, Wednesday, Thursday, London. That means that if price sell from here, then I'm going to take this sell because now it's on Thursday, right? It's on Thursday. That means that I will be expecting price to take this sell till Friday. I'll be expecting price to sell all the way till Friday. All the way down there till Friday. Then Friday, we can now have a pushback a little bit to the upside, right? So that is going to be my expectation for that price. Okay, let's see. Oh, we didn't even get there. We only took out the inducement and we sold from there. Let me check 2 hours candlestick. Let me check 2 hours time frame. Let me check 4 hour time frame. We didn't get there. We didn't get there. We only took out the inducement before we sell to the downside. But this will have been the entry, so probably this is missed. But I have like, this is more logical for me to take the sell. Like, it's not logical for me to take the sell. So we continue selling. So we took out the liquidity as at resistance and at support. So this is another internal range liquidity. Price sold on Thursday, 7 a.m. London, as expected. So we continue selling Thursday. This is still Thursday, down to Friday. In this kind of thing now, I will not be pursuing price. I will not be trying to buy anymore. Instead of that, I will wait for a new week and see if, because now this is much more like a bearish structure now, right? This is much more like a bearish structure. And this high is going to become an internal range liquidity for the future. This high too is going to become an internal range liquidity for the future. So for every structure, there is always an internal range liquidity attached to it. For every structure, there is an internal range liquidity attached to it. So as your structure is selling, breaking structure to downside, always expect always expect them to have internal range liquidity. So we kept on selling. Now we kept on selling to the downside. And then, do we have a range? Absolutely yes. This becomes the range low, then the range high. Now, what do you want to do? Let's look for a very good buy from the discounts. And the place we can take a buy from is from a fair value gap or from a breaker block. Now, you can see this breaker block. This breaker block here, this supply here that failed, right? Something like this. Price will get there, and then we can look for a buy from there. So this is another new week. This is a new week now. We are in a new week. Price printed this. Monday low. Monday low was printed. This is what I'm saying now, that in this kind of case now, I will not go to lower time frame, right? I will not go and do something like this. I want to start buying here. No, I will not do this, right? I will not do this, even though I'm expecting price to like take out that high as an internal range liquidity. So we have two internal range liquidity, this high and this high. So even though price wants to continue the sell to the downside, I will expect price to take out at least one of them. Remember, we are in the discount now, right? So we need, even though price wants to continue the sell, I will expect price to take at least one of them before we sell. Or I just want price to take out one of them, even though this, okay, yeah, this fair value gap is a very good point of interest. We could sell from there, right? So now I will not do this. Instead of that, I will wait for manipulation of Monday low, right? This is what I used to say. Instead of that, I'll wait for manipulation of Monday low. So that is still Monday. Now, in this kind of case now, what do we have? We had a sweep of liquidity from here. Price tapped into the supply. We sold down and we broke this low. So all of that price action is happening on Monday. So I could possibly get a sell from there just for price to take out the Monday low. And if I'm not able to get a sell from there, no problem. Right? Now we have taken out the Monday low, and then we are still inside of the discount. That is when I will now start looking for buy after taking out Monday low. I don't want to rush in. Why is it pausing my screen? All right, I guess my screen is showing now.
Yes.
All right, so I don't want to rush in into the trade, right? Instead of that, now we have taken our Monday low. We are in the discounts. Now let's count all our confluence together. You see, taking a buy from here is very logical. Number one reason for you to take a buy, number one, we are bullish. This sell to the downside is a pullback. Have that at the back of your mind. Number two, we are in the discounted price. Price is what we are in the discounted area. Number three, the objective of price is to take out one of these internal range liquidity. Another confluence is that we have taken out Monday low. So we could have a buy to the upside. Now let's wait for a break of structure. If there is no break of structure, price might still continue the sell. Price is possible for price to continue. Okay, we are still selling. You can see we are still selling. Now let's wait for a break of structure. Once we now have a break of structure, then possibly we can get into a buy. At the same time, I used to say this, that everything is not about break of structure. To be honest, everything is not really about break of structure. Sometimes when you understand this whole, when you understand this whole thing, you can form a trade even without price breaking structure. Millie, please stop annotating, Millie. Please look at what is happening here now. Hi. Stop that, please. So now we had a sweep the first time, we had a sweep the second time, we have taken out internal range liquidity, we are in the discounted price, and then I'll clear all of this so that you can see the structure clearly. Look at this thing here. What do we have? A trend line, liquidity. You don't want to start engaging into a sell. You don't want to, even though there is a sweep and break. Even though there is a sweep and break, you don't want to start taking a sell from here in the name of smart money. Then you want to draw your inducement from there. Stay calm and analyze your charts. No one is rushing you. Just be calm, even though you take 1 hour to analyze one pair. Look at it here. We had a low, a high, a range. Price is bullish. We broke structure. Look at the place price is even retesting it. A breaker block. We are in the discounted price now. And then we have objective. Number one objective of price. Even though I am not going to be taking a very good trade for that week, you see, number one objective for price is to take out this trend line. And then you can say, yeah, what do we have? There are people still trading within that trend line. What are they doing? They are selling from here. They are still selling from here, right? They are trading within that trend line. You see this sell from this trend line. I will not be expecting this low to be taken. This low was printed on Tuesday during the New York session. High probability it can become the low of the week. And eventually, if price sell down to still take it out, then probably I'm too early in that trade, right? But I want to see price before I will take this kind of buy. You know, now I want to buy without price breaking structure. I have taken this kind of trade on GBP USD before, right? I want to buy now without a break of structure. With my other confluence, like the discount that I was talking about, prices inside of the discount area, we are coming from a breaker block. The objective of price is to sweep liquidity, and based on the time we manipulated Monday low, we printed this low on Tuesday New York session. So I'll be expecting price to come there Wednesday, preferably New York. Preferably New York, because if it happened during Monday, price must still manipulate Monday low. So we printed this low. People are trying to sell from there. People are trying to still sell from there. Let's go to our time frame. Let's look for something. Now, there is this candlestick I always like to use. It is called I don't know the name, Tweezer something. You see these two candlesticks, Tweezer bottom, if I'm not wrong, bearish and bullish candlestick together, right? Is a type of candlestick I always like to use. Bearish and bullish candlestick together. Now, this low was printed. People are still selling from the trend line, right? I will expect that manipulation, even though we did not later buy for a long time, at least for price to come and clear out this high. Then we can now sell from this fair value gap, which is okay, is even inside of the premium. So my expectation is that I will expect price to come there on Wednesday, preferably New York, 2 p.m. or around 2:30 or even 1:30, around that 2 p.m. New York open. I'll wait for price to come there and buy from there. Now we are on Wednesday. Okay, now we are there. Okay, 1 p.m. and price moved. What time is this? Okay, price actually bought from there 1 p.m. or 2 p.m. 1 p.m. But the movement started by 2, but price tap into there. I mean, the whole candlestick, this thing happened around that 1 p.m. So we can see we manipulated the trend line. So now we have a break of structure. Now you can still get another entry. This is just me getting in on time. We can still get another entry. Now we had a break of structure. So let's wait for price to let's see what price is going to do. Okay, we printed this low here, which could be used as an inducement to later. And let's see if price is going to take it out. I will expect price to take it out. Now we tap into the fair value gap, like I said, and we sold from there. Why are we selling from the fair value gap? We are in the premium. What time? Preferably Thursday, New York. 1:30, we tap there during Thursday, New York. And I want you to look at that zone that happened. This is a very clear support stone resistance. You can see very clear support on resistance. And then smart money traders will see it as a fair value gap and all of that. But here, it is still very. Let's see if price is going to continue to sell to the downside or until that high is taken. Let me wait for that high to be taken. Oh, that was really fast. What day is this? Friday? Okay, Friday, 6th of Friday. This is NFP. This is NFP. We came here. You can see we later came for this candlestick I was talking about since the first time we didn't get there. We later came for it. So now, this is the trade I was talking about. It happened on Wednesday. So I will have. This is the internal range liquidity I talked about. The first internal range liquidity, the second one, sorry. This is the external. This is the first internal, second internal. So in this kind of structure now, it is very clear that price is coming for this low. Price is not going to continue the buy. The reason is that we are not coming back from this internal to this external. So we can have like continuation of the sell. Okay, but we had this as a sweep of liquidity. So except like we see otherwise, but this is more like continuation of the sell to the downside for price to go and take out the external. Now, in this kind of case now, there is a probability that this range will not be respected anymore, right? It is very possible. except maybe you see confirmation. But if price take out that low, this is another new week already. This is Tuesday. We still came back to take the low on Tuesday. Now, the thing there is that for those that will be having access to the record, the channel, the Telegram channel record, I have a video. I have a separate video. I'm going to add it to it on time and on this same time, days, and price where I explain it. So the next class, I will explain candlestick where we are talking about top-down analysis. I'm going to add the video to it for you to watch it again. Though this particular session might not really be much more deeper into it. So that is why I'll be sending that record aside from this one. It's going to be like explaining it, giving series of example, especially on Euros USD and GBP USD. So because now we are this is 9:30 already. I wonder I'm tired. So eventually we still buy from the discount, and it happened. We started buying from that same Wednesday. So in all, try to minimize. It is not about trading every day that will make you profitable. It is not about the amount of trade that will make you profitable. It is about the quality of trade that will make you a profitable trader. You can take total of 8 trades in a whole month, and you will do well. You will make more money than somebody that take 20 to 30 trades. It's very possible for someone to take 20 trades in a month. It's something that I've done before, and it is very possible. So when you try to minimize the days you trade, to Tuesday, Wednesday, Thursday, Friday, London. Yeah. So when you're trying to minimize it to that, like that, look at me, for instance. I took a trade. It is very possible. Like I imagine when you get to take 2 trades in a week, and those 2 trades are wins. So tell me, how will you now end up making a loss in a week? So it is very possible for you to close a week without taking a loss. Right? If you take quality trade, less trade, you will take quality, like less loss. Like you don't, in fact, your loss will be so minimal. So like I took a trade yesterday. Today trade was a missed trade, and then I'm looking forward on BBC a bullish structure on US30 tomorrow. So if I'm able to get in, that's all, right? That's all for the week. Tuesday, Wednesday, Thursday, that's all for the week. 2 trades, sometimes 2 trades in a week. Quality one, like 1 to 5 hour. So I have used just 1 trade to pass some profit account, 8%, right? Just 1 trade, because now I take quality trade with more logical reason, not me having to buy, sell, like you buy from here, you sell from here, you buy from here, sell from here, buy, sell. Even though there is this quote that this guy said, Andrew, like he said it, I wrote it down somewhere. I don't know how he made the quote, but I'm going to look for it and possibly drop it on the Telegram channel. Like it is just like he was trying to explain that even though you know that you have this strategy that give you plenty of trade, but that doesn't mean that you should not start misusing it by taking that plenty of trade. When you start taking a lot and a lot and a lot of trade, you will take more losses and you will still make more wins. That is how it is. But when it comes to trading, that is why we have risks to reward. That's why we have risks to reward. You don't necessarily have to be a swing trader holding trade for 5 months. No, absolutely not. You can take 1 trade in a week and you pass a profit account. I'm not even saying, I'm not talking from someone else's experience. That's happened to me. Like one single trade on GPP, JPY, sometimes NAS 100, and you are done for it. So try as much as possible to see the bigger picture of price. Don't get lost on 1 minute. Don't get lost on 5 minutes. Even 5 minutes, don't get lost on 5. Why can't you come to 1 hour? This is 1 hour I've been using since, right? This trade was a 20 pip stop loss. And the TP was how many pips? 93 pips. This is 1 to 4. 1 to 4.5 R. So let's assume 1 to 4. Now, it took price how many days? It took price 2 days. Wednesday stroke Friday morning, because this happened in the afternoon. Yeah, stroke Friday morning. So when that is like 2 days and some No, 2 days, right? Because this happened on Wednesday, New York, and price started selling on Friday, New York. So it took price 48 hours. That's 2 days. Now, why can't you hold trade? Why can't you hold trade for 2 days? Right? This is something you can actually hold. This is 4%. That's even though you are risking 0.5, this is 2%. So you just have to learn to see the bigger picture of price. Don't get lost on lower time frame. Don't get lost on lower time frame. You can still be able to like engage in this kind of thing now. You'll be using this range, right? This is going to be you'll be using this range I had mapped out before. Then eventually, this is going to be another range. This is from my explanation. If you understand range, this high and this low is another range. So we can sell from the premium 100. We can see a buy from the discount. You can see this gap here from here like this. This is a supply. Look at this supply here. This was a supply before that sent price to the downside that broke this low. So that supply failed. So there is high probability for price to come back there. All you need is an inducement. Let me see what happened there. This time, when all of this happened, I have stopped trading in USD. September, I have stopped already. Around that September, October, I stopped trading. I don't really know whether or not this even happened. Okay. Wow. Okay. So this low was printed inducements. All right. Like I said, this is a low fair value gap. So this point of interest is big. You don't necessarily have to like place that limit directly from it. But we sold from the premium. So we took out this range. We broke above this side. We took out this range. So this range is out of the picture now. We remove it. You don't want to start using that. Where is the new range you'll be using? This is going to be the range you'll be using. From this low to this high now will be the range. So it's still the same thing. You wait for price to come inside of the discount. So currently we're in the discount. And then even though you want to take a buy, it has to be from the discount. And if you want to take a sell, it could be from the premium, something like that. But this highway, it is an external liquidity. Let me see if price should take it down. I'll be expecting price to take it out. We should just set back inside of the discounts. And then if the discount of this match with the discount of this, it becomes a high probability trade. So because this is the swing structure, all of this thing happening, you can see that they are still happening inside of this high and this low. You can see that price has not gone above this high. We did not go below this low. So we are still, this is the swing. This is not the recent. The new is from the other one. So I will still expect price to take out this high. Even though you want to take a sell from there, okay, we took it out, but not okay. We just manipulate it a little bit. We swept it. So now that we swept it, this range is out of the picture. You see, we respected the range for some time. We sold from the premium back into the discount. So we respected the range for some time. Now we had a manipulation of price from there. What day? On Wednesday, New York. On Wednesday, New York, we had a manipulation of price. So I will expect price to give me an inducement, and then, if possible, price could actually sell, because that is a manipulation, not a break of structure. So we took out this high. Now, this kind of thing now, I will be looking to sell. Number one is to clear out this trend line. Objective of price, I will be looking for a clean sell to clear out this trend line. So price actually tapped there on Friday. So I'll be looking for a sell, right? Yeah. I'll be looking for a sell. We had a manipulation of this external high. We had a trend line. So the sell is to clear out this and possibly clear out this. This will now become a liquidity because this low did not break structure to the upside. Instead of that, it swept this high. There was no break of structure. So I will be looking for a sell, especially to clear out that trend line. So I cannot come and be doing something like this now and be doing sweep, break, and then we'll be trying to buy from there. No, I see all of that as a liquidity for price to clear out. So you can see we took out that as an inducement. This is what we had them tap into it. This is a very clean point of interest. It's a very good inducement, right? So this high here, let's see if price is going to come there. Oh, we manipulated the high. Actually, we manipulated this high before we sold to the downside. But what day did price did that? It was on Monday. This high was on Friday. So we took out the previous week high. So like I said, the video I'm going to send, I'm going to explain. I used to talk about previous week high, previous week low, Friday high, Friday low, Monday high, Monday low. So this 1, 2, 3, 4, 5, 6, this 6 liquidity point that things are usually used. Okay, you can see we sold. So the major objective of this sell, the one thing I first saw that I said I would be interested in the sell is this trend line. that made me to be so much interested in the sell. So I will not come and be doing sweep and break around here and be trying to buy from there, right? So because if you try to see the if you try to see the bigger picture of price, you will take reasonable trades. So this will be the end of the class. I'm so tired. So that's just it.
Good.
When we meet tomorrow for top-down analysis, so the last day, let me stop recording. The last day